Wonderful good day, ladies and gentlemen. Commodity TV, and it is again company presentation time. We want to present you today Timmins Gold. Let's first start with a little overview about the company. Timmins Gold is a Canadian production and development company with a profitable gold production in Mexico. The company is listed at the Toronto Stock Exchange and the NYSE in the USA. Timmins Gold operates the San Francisco gold mine in Sonora, Mexico. In 2013, they reached a record production of nearly 121,000 ounces of gold. The 2012-2013 drill program raised and expanded the reserves around 20%, the measured and indicated resources 30%, and the inferred resources by 77%. The new mine plan increases the life of mine, the LOM, now to 9.5 years with a 122,000 ounces yearly production predicted. The strong exploration potential at San Francisco and the region should enable the company to expand their operation in the future. The company has 153 million shares outstanding and a market cap of around $225 million. Cash stands at $14 million and the debt is currently paid back through a bought deal of $25 million with Canaccord. This bought deal was the first capital raise in the last 5 years. Timmins Gold owns North Sonora over 200,000 hectares of land along the Mojave-Sonora megashare. They have approximately 240,000 meters drilled at San Francisco La Chichara in 2012-2013. The whole district has the potential for maybe 2 or 3 more properties of the style like San Francisco. But let's talk about the San Francisco mine. The main asset are the 2 at 100% owned by Timmins open pits called San Francisco and La Chichara. They are operated as a heap leach plant. The property has a size of 45,000 hectares with an excellent infrastructure in a desirable location. The gold reserves stand at nearly 1.6 million ounces with 91 million tons at 0.54 grams gold per ton. The mineralization is still open along strike and down to the depths. The target production in 2013 was 120,900 gold equivalent ounces, which was reached through a crusher upgrade to 24,000 tons a day. The mine is 2 kilometers away from the Pan American Highway located and has enough water rights, power and direct power from the grid. They have also perfect access to local and skilled manpower in the neighboring communities. The state government supports mining very well. The workforce of 350 people in Mexico are all Mexicans and there are no expats. Timmins Gold has a high understanding of their social responsibility. They take care about the environment, the surrounding land and water, air, as well the neighboring communities and the people who live there. They take care too about a better supply for health, education, renaturing and security in addition to local employment. Timmins Gold has an award-winning ESR status which is called Empresa Socialmente Responsibile in connection with the social responsibility. Well, how did they walk the fast track into production? They started 2005, founding of the company. 2006, IPO. 2007, they purchased 100% of the mine. In 2008, they had already a pre-feasibility study, and 2009, financing and completion of construction. 2010, start of the commercial production. It's fantastic. Timmins Gold is since the first production day profitable. The throughput increased in the last 3 years by 140% from 10,000 to 16,000 tons to now 24,000 tons a day. Through active exploration, they enlarged the property enormously. Since 2008, the inferred resources rose 25 times, the measured and indicated resources by 170%, and the reserves also by 170%. In the last 4 years, the production increased by 151%, and the growth was completely financed out of the operative positive cash flow. The company is one of the highest returns on equity of all gold companies in 2012 with a yield of 24%. What is the target for 2014? The production should reach 115,000 to 125,000 ounces gold, with cash costs around the $800 per ounce. The whole cost situation looks good for Timmins Gold. In the first 3 quarters 2013, they had total production costs around the $900 per ounce. The net profit after tax was around $20 million. Cash at year end per 31st December stood at a good $14 million. The pre-tax NPV at 5% discount rate is at $381 million at $1,350 gold. The estimated life of mine based on the reserves is now at 9.5 years from the second half of 2013 up to 2022. The estimated life of mine production should reach 1.16 million ounces gold. The estimated life of mine of the average yearly production is 122,000 ounces gold from 2014 up to 2022. The estimated life of mine total mining costs, meaning the cash costs plus all capital costs, should be at $927 an ounce, which means that even with the low gold prices today, the company still has a margin they can live with and make a profit. But let's talk about the future exploration, which is important for the future of the company, of course. El Durazno. The mapping and sampling show gold and polymetallic occurrences along the northwestern belt within an area of 4.5 kilometers length by 1.5 kilometers width. The mineralization contains quartz, tourmaline, carbonate veins and veinlets. The mineral occurrences continue beyond the final pit limits. They drilled 3,000 meters in 2013. Second target is La Pina. La Pina consists of a series of northeast trending limestone ridges and is 25 kilometers away from the San Francisco mine. The mineralization can be compared with classical Manto and Chimney districts in Mesa, central Mexico, with 1 kilometer depth and long strike lengths. The exposed mineralization is of the silver-lead-zinc replacement type. Some data, facts and figures are about Timmins Gold. Shareholder basis. They have 64% institutional shareholders, 4% holds the management and 32% is owned by retail shareholders. In a full cost comparison for 2014, Timmins leads the peer group with approximately $940 per ounce and is in front of Osisko and Rio Tinto. It is expected for this year that the return on equity stands at 11.5%. This is a strong yield compared with the average of 3.7% in the peer group, and the 2014 cash flow yield should be over 10% compared to 1.4% average. Some valuation metrics. Timmins has a 4.9 multiple price to cash flow ratio. The price to net asset value multiple is at a low 0.73. Both relations show the low valuation in comparison to the peer group. Overall, Timmins looks like a healthy company, and with their enormous land position, they should have still a good production future beyond the 9.5 years. Life of mine today and lots of room for exploration. The total cost situation below the $1,000 per ounce of gold level leaves them still enough room to make money in this low gold price environment with a nice margin. This is an interesting and good managed company which should benefit a lot from a rising gold price. So watch out for the company, make your own due diligence. Thanks and watching Commodity TV. Bye bye.